Hey, Ruben, thank you for taking the time.
Thank you,
Yeah,
Nick.
hey, listen, why don't we just tell me a bit about altitude and your guys' work around 1033? Why is it such a big deal for US banks?
Absolutely. We at Altitude are a strategy and technology firm. We're focused on helping financial institutions get ready for open banking and open finance, and also in implementing the requirements that are set by regulators. And in addition to that, monetizing those requirements and helping the financial institution grow and differentiate itself. So, why is it such a big deal? Well, in the US, the CFPB has introduced Section 1033 of the Dodd-Frank Act, and compliance timelines are starting in mid-2026, which is really coming up. The largest financial institutions, $250 billion and up, need to comply in 2026. The next wave, which are 10 billion to 250 billion, need to comply in 2027. And what I mean by that is financial institutions now have to publish APIs for consumers to be able to securely be able to share their data with the third-party services that they choose to use. So uh, this is a very big milestone for the U.S. market because right now open banking is becoming regulated. So, Dave, knowing that Radium is active in multiple geographies, what are the biggest challenges that you see financial institutions preparing for regular open banking? What has it been in other geographies that we can expect to see in the US as well?
So there's three big ones. So first and foremost, it is actually surfacing data in a standardized format via API. That's like the vanilla 101 challenge. Most banks will be there for most data sets anyways, because they've been doing this for some other commercial purpose. Okay. That's for the regulated data mandated by 1033. Usually they're in the middle of some big project for other pieces in the bank, for example, payment initiation for corporate banking clients, et cetera, et cetera. Okay. Second piece here is actually the connectivity of those APIs with third parties. And that's where we come in, and it's a problem we've obviously solved for in a big way in Brazil and the UK. And lastly, the whole management of bilateral contracts, KYB, of all these third parties that they need to now have capacity to do if they're going to be compliant with the regulation. So there's an operational piece, there's an API architecture piece, and there's a ongoing management of API security piece.
Absolutely. All of these are absolutely critical. And I'm just going to add one more thing to that, and that is linked to uh, consumer permissioned data sharing through APIs is
Mhm.
a big mindset shift for the bank, especially for financial institutions that have not yet been producing externally facing APIs. And that is a cross-functional exercise, being able to support that it's not just a technology. Uh, it's not just a technology problem. It's also an operational problem. It's also a compliance problem, and a lot of different departments now within the organization have to work together to solve this problem and to be able to support these APIs and these ecosystems in a safe and secure way.
Ruben, are you seeing your clients looking at this exercise beyond the mandated data sets? Like, are they going the
Absolutely, some of them
same?
are.
Sorry, go ahead.
Sorry, go ahead.
Are they looking at the same, getting doing two birds with one stone? Are they looking at taking all the effort to comply with 1033 for other API-enabled business lines?
Absolutely. 1033 pertains only to personal or consumer financial data. So that is what's covered by the regulation. However, a lot of financial institutions that we're working with are actually looking into expanding that to also their business banking. And there are multiple strategic reasons to do that. So we're definitely seeing that. One of those reasons is that being able to support data sharing in a secure way and being able to get the same transparency for business banking that you can get for personal financial data as a financial institution is really attractive. Another thing is that there are more options to monetize the data and to monetize the APIs when you're expanding it beyond just the personal financial data.
Mhm. What are some of the monetization challenges they're chatting to you about?
Well, to start with, the regulation itself, 1033, requires that data can only be used for the purpose for which it was shared and no other purpose. So, for example, cross-selling is not allowed, and marketing based on the data obtained is not allowed. Uh,
Mhm.
Another challenge is that, or not challenge, but requirement of the regulation is that access to personal to the data via to the personal data via APIs cannot be made paid, and therefore the APIs need to be made free. So it's quite a significant investment that a bank needs to make in order to build and launch those APIs, and they have to monetize them in different ways. So that's for personal data. Now, for business banking data, right now, it is actually possible to, for example, have paid premium APIs.
Mhm. 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 And thumbs up question here. If you think of the range of wave two banks you're speaking to, what percentage are on track to comply and thrive by the deadline?
Yeah, most banks are actually still in wait and see mode. So it's a small percentage that is charging ahead. It is the larger ones in the second wave that are really charging ahead with this and that are moving ahead with developing their publicly facing APIs. Now, these are usually the same banks that have already had an API program that already had exposed external APIs, and now they're making them or they're launching a new set which are 1033 compliant. The smaller ones, especially, are the ones that are mostly in wait and see mode. And as we know that there were a lot of changes in the administration, there were changes in the CFPB, which is now creating a bit of a state of uncertainty in the market. And we see compliance departments being on hold, reevaluating the situation on a monthly basis before actually allocating the resources to this exercise.
Interesting. So, I mean, we certainly had our questions over how realistic it is that this legislation is going to be um, enforced, uh, engaged with a handful of market participants, and the near consistent feedback is we will be ready to comply by the deadline, um, regardless of the regime that enforces it. And we view this as an opportunity to invest and get our API estate to the place it needs to be for both commercial and future compliance reasons.
Right. Yeah, and that is absolutely true of a lot of the larger financial institutions. They are on track. They are proceeding with it regardless of what happens with the regulation. And that's going to be really, depending on where the regulation goes, what's going to change for them is really how they're able to commercialize those APIs. If you remember,
Mhm.
now suddenly if the regulation is relaxed or some rules are relaxed, now you have more leeway in terms of what you can do. So, David, in your experience, what are the main
Mhm.
challenges of financial institutions in terms of onboarding third-party partners and compliance costs, the timelines, and the complexity of the processes?
Yeah, so listen, I'm going to split this answer into two. Everyone talks consistently about the hassle they have in thinking, how are we going to KYB anyone who knocks on our door and requests API access? It's not a solution we think we're going to solve for, right? It comes up in the same conversation of what Raidiam brings to the table, which is a lot of experience in the technical challenge in scalably onboarding, maintaining that connectivity, and giving a really easy to use kill switch for a business to shut off access the moment there's a smell of foul play. That's a space we're in now. I mean, it's a roundabout answer to the question. Anyone who's doing serious analysis of 1033 requirements is thinking about what this means for their business, what resources they need. And to your earlier point, given that they cannot monetize the 1033 mandated, the Rule 1033 mandated APIs directly, how they make this a viable part of their business beyond just a compliance mandate.
Right. That's a challenge across the board in the industry.
I mean, let me spin it back to you. I know you're speaking to banks all day and every day about their 1033 readiness. What are the operational risks associated with these compliance requirements?
Being able to handle the volume of financial of third parties that are required to or that are requesting to connect to your APIs. So so if you think about it, with the world of screen scraping, any third party can obtain data through an aggregator, and as a financial institution, you have no control and no oversight as to who checks it, who downloads the data. Now, with API-based access, as a financial institution, you have to do KYB, and this KYB process is lengthy. It has a lot of rigorous requirements, and most financial institutions' compliance departments are not prepared to handle this large volume of requests. Another one is, in some cases, they don't have the resources to conduct all of the checks on their own and ask all the right questions. And also, the third thing is that there's no easy way to ascertain that the third parties are indeed meeting the requirements that they claim that they do. So with the larger third parties, where you know that they have clearly defined processes, it's a lot easier. But the challenge becomes with the newer startups that emerge. How do they meet those requirements, or are they able to make the right changes and maintain those processes in order to remain compliant?
Yeah, and something, I mean, that is coming up in our conversations is intuitively API access creates a cybersecurity attack plane. And across all covered institutions and all covered data points, it is a matter of time till we learn of a data breach. The solution architects at banks do not want to have their names on the lawsuit of when Russian hackers are selling customer financial data on the dark web.
Dave, looking ahead, how do you see regulated open banking evolving in North America, and what lessons do you see that can be drawn from other jurisdictions like the UK and Brazil?
Yeah, no, listen, great question. So while 1033 is a little bit unique, nothing is fundamentally new in terms of the requirements on the banks. They, not unlike PSD2, will have the challenge of enabling scalable access to very sensitive data. So what I would say is don't reinvent the wheel. There's quite a tried and trusted method to get the API architecture right. So you can, onboard data recipients in a scalable way that doesn't create an unbearable burden on your technical teams. And I mean, it's just worth highlighting this point. Open banking has existed at scale in Brazil for a couple of years now. There are billions of API calls a month. Every single retail customer's data is available via API, and there has been zero cybersecurity breaches. So there are models to emulate.
Absolutely. What do you attribute Brazil's success in having zero security breaches?
The FAPI standard. There's asymmetric security on all APIs, so there's no keys and secrets going out in the mail. There's a private public key pair, sort of an established best practice that, because it is standard based, becomes very easy for any data receiver to onboard. And using the directory, a business user can has immediate access to a kill switch if there's any smell of foul play, and a very granular kill switch. Is it access to a specific API? Is it an entire organization that gets cut off from access? So on and forth. But really, that first point, asymmetric security on all API access, is fundamental.
Absolutely is. And let's not downplay the impact of having a directory where all known parties are
Mhm.
registered and where any third party can be blocked by either the financial institution or the regulator if the need arises.